Well, hello there. Hi there, this is Lori and Wendy. Wendy is behind again. We're gonna get her up front here one day soon. So we're here, episode 2. We thank you so much for joining us. Again, we'll remind you with Royal LePage, your community realty with the Key Group. And today we're gonna be talking about financing. So I wanted to welcome Jody and Jessica.
Hello, thanks for having us.
Thanks so much for having us.
Well, thank you. They actually invited us over to their place. We're here at Sherwood Mortgages, and I love this boardroom. So thank you so much again. And so today, we're going to be talking a little bit about financing, what's changed with the new stress test rules. Everybody knows that things in the mortgage arena have changed, and it has become increasingly important to get your mortgage pre-qualification well in advance of beginning your home search. So to that end, I'd like Jody and Jessica to speak to that.
Perfect. Sure. So I think the first thing that's important is when you talk about getting your financing together before, talk about why it's important to use someone like myself, like a mortgage agent. Typically people are used to going into a bank, and a bank, they can go in, and at that point they're offered one product, one rate, and that's it.
Sort of like a one size fits all?
One size fits all, right.
Okay. Mm-hmm.
With someone like myself as an agent, we have access to all of those banks that they have access to, plus we have access to so many more lenders that have so many more products that may be better suited for your clients. We help your clients to shop around, we help to educate them on the products, we help them to understand certain things that they may not understand going into a bank, like penalties, prepayment privileges, and we really just try to customize and tailor a perfect product for your client.
I would say the value of a mortgage agent as well is that the mortgage agent has the client's best interest in mind versus whereas if you were to go to a financial institution like a bank or something like that, they only have limited access to specific things. Whereas someone like Jody can customize a tailored solution and is working in what's best the client's best interest versus this is all that I have access to, and so this is what you're going to get.
And that's why I like to work with people like Jessica. So Jessica, unlike working at a bank, is one of our lenders. And maybe she could speak to some products that people might not be aware of by just going into a bank.
Absolutely. So I work for a company called Merrick's Financial, and we are a monoline lender, so we provide financing for mortgages. And we have a lot of different products that are available to your clients. We can help, finance, your typical purchases and refinances, the norm there. We can look at rentals. We can help you out with rentals and holding companies, which is really cool. We have a great product called Flex Down, which basically allows you to borrow funds from your own resources as the down payment. So, people that are looking to get out of renting a little bit earlier and have access to a line or something like that, that is a very cool strategy as well. Purchase plus improvements. So, if you're buying a home and you want to do some improvements as well, you want to include the value of the improvement into the home amount. What else do we have? We have a really cool new mortgage with the ability of a part of it being interest only as well, which is cool. So that helps cash flow solutions.
That would help a lot of people, I think. That's actually a really good option.
Very cool product. New to Canada. A lot of second homes and stuff like that. So we finance all of that stuff. And one of the true values of a monoline is, I would say, the penalties and the way the penalties are calculated. Because when you are comparing penalties with a monoline versus with a larger, with a bank, the bank penalties are going to be astronomically larger than they are with us. Also, another thing to keep in mind, some lenders have what's called a bona fide sales clause. So, in order to break the mortgage, you may need to sell your home.
Really?
Well, that's something that we don't have as a lender. So, all of these little things that is really important for you to know, and that your mortgage agent is fully aware of. And that's, why it's important to, when you're having these initial discussions and, looking to buy a home and things like that, the first step should be, engaging an agent.
I couldn't agree more with that. That's actually really great information. So you're saying basically that it's not just about the rate.
Not at all.
Not at all. The rate is actually the last thing that we discuss, and I did a video shortly last week that there's no longer just a rate.
Right.
There's a rate based on high ratio mortgages, there's a
course.
rate based on insurable mortgage, on conventional mortgages, on your Beacon score, on how long. So we can go through all of that and then find the best rate for you, but it's so hard just for someone to pick up the phone and say, what is the rate?
Right.
We can't do that anymore with
No.
with the new stress testing and stuff like that. To get to that rate question, it's 20 questions to get there. So
Wow.
the focus should really be, it's solution-based lending, and your mortgage agent can go through your application and say, okay, based on your situation, this is the best solution for you. It's not about the rate, it's about the product.
And
it may
every
be about the-
situation is different.
Yeah, absolutely. And, it might be about the, monthly mortgage payment, or it may be about, your long-term goals and prepayment privileges. It's not about the rate.
So that's amazing information also, because I think traditionally we were raised to call up a broker, call up every broker, or a bank, and who can give me the best rate.
Right.
No
We
one
all have
thought
the same
of it.
rates. And
Right.
that's the thing too. People are like, well, we all have access to the same rates.
Exactly, right, that makes sense.
But yes, you can no longer just do that and be like,
I'm gonna
Whatever
go
that's
with, right, because their rate is better. So honestly, caution everyone to really listen to that and take that to heart. So, because I know a lot of people are only always looking at the rate, but there's so much more involved, and that's why it's important to have somebody represent you and your best interests. And that's exactly what you're saying.
And how much do your services cost?
so that's a great question, Wendy from behind the scenes. Actually, to use a mortgage agent is free, and it seems to be a misconception that there's a fee that people have to pay to use a mortgage agent, and that's why sometimes they'll go to a bank because it's free.
Okay,
It's free. We
It's
offer our
free.
services for free.
okay, I think everyone understands that word. And you know what? No, and this is honestly great information for, and that brings me to my next question, which, what message, what do you think is the number one most, maybe number one is a little bit too specific, but what is important for first-time buyers or young buyers, or just first-time buyers in general, old or young, to prepare them for home ownership?
So I think for me, when we talk about rates, what we've kind of left out is our credit scores and our Beacon scores. And I think a lot of young people aren't quite sure how to build their credit scores.
Right.
And I think the misconception with them is that if they have their credit card and they use their credit card and they pay it off each month, that's going to raise their credit scores, and which is actually incorrect. If you're using 100% of your credit available and you're paying it off, it's going to show the banks and our lenders that you are relying on all of your credit to live. So it's basically about utilization. So really what you should be doing is only using 30% of the available credit on your credit card.
30%.
30%.
Okay.
Because then it shows you only need 30% of your credit
Okay.
when you need it, and pay that off.
I see where you're going with that. So if people are maxing out their credit cards, that's a red flag.
Right.
Absolutely. As a lender, we look at utilization and reliance on that. But I would also say, keeping on top of your payments as well.
course.
So, if you forgot this bill and didn't pay
Right.
it or things like that, we look at missed bills. We look at missed, not necessarily for some home buyers, but mortgage payments. That may be a make or break on a deal when we're looking at the overall application and deciding whether or not we're going to commit on it. So, I mean, there's lots of different things, and I would say, first-time home buyers, engaging an agent to talk about what you're going to be qualifying for, what additional things. A lot of the times, lenders we look for a certain number of trade lines on the
Okay.
credit bureau too. So, if you've got really thin credit or you've only got one trade line, that's not that great. So, a mortgage agent would be able to tell you, okay, maybe go open another credit card, or things like that as well. There's lots of different things that you can start to do to start building that healthy credit profile.
So building your credit is so important, and using it is so important. Keeping within the lines that Jody mentioned before, the 30% rule, and obviously if you have to use more, you're gonna use more, but just make sure you're paying on time, and that you're not missing, and if you are missing, then to rectify that as soon as possible. So that's important for everyone to know. When you have no credit, there's nothing for you to go by. So if someone's coming in to get a mortgage and they don't have any credit cards, how does that work?
Depending on the lender, you may not be eligible at all.
Interesting.
So, I mean, some people think that, cash is king and just going to do everything in cash and no credit score or anything like that. Well, I mean, if somebody came for an application, we call that a beacon reject when there's no credit score.
Right.
We wouldn't, and that person would be able to be on the deal.
Okay, that's really good information.
Mhm.
You know what, Jody and Jessica, thank you
Thank
so
you.
much.
No problem. Thanks for
guys.
having us.
Thanks today. Thank you so
Thank
much.
you.
Nice to meet
You too.
And Wendy, so
Yeah.
we're gonna say goodbye. Wendy, do you want to show yourself for 2 seconds?
Yes, the infamous Wendy.
Thanks for inviting us here, and thank you so much for all this wonderful information. Okay, we'll be back.
Thanks.
Bye.
Bye for now.